Hello traders, welcome to the weekly market overview with me Pierre at PAFX. So guys, we have a very important week ahead of us next week. So yeah, it's all about planning and be ready, and that's why I used to do these sessions to help you out to find some good trade ideas or to find some good levels to trade from, and I will guide you through some of the markets today as usual. A quick reminder that the course that will start the 6th of August still have 5 seats left for those of you who still in the thinking. It's time to take action if you want to join. This will be the last course with this price tag of $499. After that will be a different price, and the lifetime subscription to the room will not be available anymore. So yeah, if you want to take this last chance, visit my site at pa-fx.com and register now. As usual, if you do like this session, please hit the like button. If you are new to this channel, do not forget to subscribe. We start with risk disclaimer as always, and I want you to carefully read this to know about the risk involved in trading, and that these sessions are only the way I will trade the market and the way I see things, and it's not a signal in any way. So please pause the video and read the disclaimer full. So as I said, we have a very important week ahead of us. As you see on this screen, I have only the major impact news on, and you see that we have lots and lots of major impact. So it's gonna be a bumpy ride. Some pairs will trade and be very volatile during next week, and things will change dramatically from day to day. I think we're gonna start the week with the JAPI news, the most important, and the BOG outlook report, the BOG policy, and usually I used to say do not expect fireworks, and we may not be expect fireworks, but there have been a lot of headlines talking about possible change in the language from the BOG or the possible change in the monetary policy. So this time I think it is very important to keep an eye on that. The boring thing, and as usual, that for the JAPI it's always tentative, so you never know when the press conference will be. So you have to keep an eye on that during Asian session. During New York session on Tuesday, we do have for the CAD the GDP months on months. After that, USD consumer confidence. Then Wednesday we start the day with New Zealand news, employment and unemployment rate. After that, during London, we do have manufacturing PMI, important but not as important as the services PMI for sterling, as we know. And then of course after that, the FOMC statement, crude oil inventories. Also very important, there is no expectation for any hike for the fund rates. Thursday we do have Super Thursday for the sterling. Before that we do have trade balance from Australia, but it's gonna be all about the sterling after that. As you see, construction PMI, inflation report, official bank rate votes from the UK, monetary policy summary, and official bank rate. And after that, the most important thing is actually for me is the speech that we're gonna have to see if we have any change in the language, if we are getting a dovish or a hawkish hike, since the market is expecting a little bit of hike there. And Friday we start with the retail sales month on month for the Aussie, and an important number, service PMI for the sterling, trade balance for the CAD, and non-farm Friday is to come as well. We should keep an eye on the average hourly earnings. Once again, this is the important number to look at. Of course, the best way would be if we get non-mixed result, all green or all red, but that does not happen a lot. But once again, important clue is the hourly earning for the US. Things been going very well, and we know that. So keep an eye on the earning, and not much about the non-farm headline itself. The non-farm number is not as important as for now, more than keep an eye on hourly earnings. Yeah. So yeah, those are the major event. If we put the medium impact event, we see that we do have the double of that almost, especially in the start of the week. But I think with those major news coming, so the market will be only looking at that. So let's hit the charts, and we start with the Dixie as usual. We are on the weekly time frame, and as you see, guys, we're still trading sideways, and we may continue sideways through August as the market slow down summertime. And you're gonna see that today most of the market we're gonna talk about are in some kind of sideways or ranging market, the most of them. So DIX is still having trouble at the 200 weekly moving average. As you see, all the wicks are coming from the upside, and last week was a slow week. Indecision, we didn't go anywhere actually. So as you see, we had this rejection from the monthly R1, and the price held at the lows despite a little bit of a bullish candle, but not a major one. We still have this to talk about hidden bearish divergence on the weekly time frame on the Dixie. And if we go down to lower time frame and daily, you see that we have this clear range down here. I think this gonna be the important range to keep an eye at, and it could end up being the summer range that we're gonna be trading through August. All depends on how the number look like next week and after the NFP and FOMC. But the range I'm looking at for the Dixie is still the 94.15, as I told you last week, and the extreme high is the monthly R1. 95.15 is also another good level to look at for a possible resistance. Right now we are mid-range after very nice bullish engulfing on Thursday. Friday was a bearish day, but not the biggest candle to look at. So what happened on the 4-hour time frame is that we did reach this 94.15 that I talked about as a good support level, and we got a nice bounce to the upside on Thursday, especially after the ECB press conference, and that Mario Draghi was not as hawkish as the market was expecting. So that's why we've got this bounce to the upside on the dollar, reaching and testing previous highs. We did close actually a little bit above previous high, but the next candle was a bearish engulfing candle and went back down to retest the 200 moving average on the 4-hour and to retest previous neckline and previous structure. So where the Dixie is right now short term is an important level, because from here we may see a bounce and continuation higher toward 95.15, and if that broken, we start looking at the area around the monthly R1 here as a possible resistance level. But as first level, I see the 95.15 as the more important level to watch. Nothing will happen here until we leave this range. So either we want to see a break below 95 94.15 to continue lower toward the monthly S1 and these lows down here. As I said, once again, we are mid-range now, mid of this upper range, as you see, and it's not the best level to make business at. Keep an eye on 94.15 and 95.15 up here as your level to start looking at this market. Sorry guys. Okay, so back to the daily, you see it clearly. This range here must be broken for any continuation, if it is to the upside or to the downside. The RSI on the daily still showing a strong bearish divergence. It is an important area, and we may still get that deeper correction despite strong US dollar numbers. The technicals are saying we may get that deeper correction, but not forget that this is still a strong bullish market. We're still trading above the 200 daily moving average, but below the 200 weekly moving average. Yeah, so on the weekly you see it clearly, we're still in a strong bullish market, but these wicks coming from the upside keep giving me the idea that we may do that deeper correction. Let's not forget that this breakout happened, we never got a fade back to that area. Yeah, gold is next, and yeah, still bearish. Even last week, as you see, we went back, retested the 200 weekly moving average, and then another push lower. So when we broke this trend line here, we've got a higher high, retest to the trend line. There was a try to make another high here, that didn't happen. We've got consolidation and then broke the neckline, and since then we've been in a bearish mode, breaking below this trend line as well. So I still see the 1220 as an important level down here as a possible support. We are at the extremely oversold area. Daily time frame, also no change in the bearish move. Impulse correction, impulse correction, impulse correction, impulse correction. So we're still making lower lows and lower highs, but sitting at this area here where we do have this 1220 as a possible support. As you see below that, we still have another low here, which is around 1205, and the last line of defense is the 1195 area for the gold. Well, seasonally, gold used to have a little bit of a run in August. I'm not sure that will happen this time, but what we have right now is this little range to work with, and that is to know, after this consolidation, are we going to test that 1195, or if we are going to break above the range for a possible continuation or a deeper correction, at least to the upside. Yeah, so keep an eye on this range. Go down to lower time frame, and you will see it clearly inside this box on the 4-hour time frame. So far, every time we reach this level, we've got a little bit of a bounce to the upside. Yeah, and last Friday we've got a nice run all the way toward daily pivot point, couldn't break above, and then rejected a little bit lower. It is still a bullish engulfing candle here. One could argue that it was some profit taking at this level after this move to the downside, and that Friday trading is usually, and especially last Friday, was a little bit of a slow market. Yeah, so as you see on the 1 hour, also you see it clearly, the range. We've tested the daily pivot point and the 200 moving average. It did actually broke a higher high here, but it is still a lower time frame, and to call any reversal on gold, you want to see this range broken, retested, and then the continuation. Yeah, otherwise it is still a bearish market, and you should be selling the rallies in anticipation to continue lower. Yeah, but why to sell at support? You want to see this broken to start selling. As far as this support is holding, I would not be selling at support. Okay, let's take a look at oil. So oil right now, the last couple of weeks, a little bit of a sideways, slightly higher. We're still ranging between monthly S1 and the 69.50 area, which was our support level that we were looking at. If it's gonna break below it, we got the break, we got the retest, but we never got a lower low, as you see here. So this is our first higher low here, but there is no higher high to start thinking for a possible continuation to the upside. Yeah, so since we have just only one higher low to call this move to the downside, sorry, as ended move, we need to see a higher high as well. So short term still bearish, but long term and on the weekly time frame, you see it clearly that we are still in a bullish market above the 200 weekly moving average. We are still having higher highs and higher lows, as you see here. These moves are still bullish moves. Yeah, no one can argue that. And I think as far as we are still making those higher highs and higher lows on the weekly, it is safe to say that we are still in a bullish market. To change that for a longer time frame, oil need to break below this low here, and probably also below the trend line. So let's go back to the daily. What we could have right now is a possible bear flag, something like this, some consolidation before a break to the downside as well. Yeah, but in my opinion, if oil managed to hold back above 69.50, which is this level here, if we manage to hold above that on the daily, then there is a possibility to test a little bit higher, at least 71.60, and the last high is of course up here around this supply level. We know that the 75 is an important level that been mentioned by many countries as a good price, fair price. For our time frame, we see that we've tried to break outside of this channel, and we did the breakout, but we're still having trouble at the 69.50 and just below the 200 moving average on the 4-hour time frame. We broke below also previous low, so we are not making higher highs and higher lows anymore. We've got our first lower high, so it is a very tricky area now, and we should keep seeing this as resistance and the monthly S1 as support. Nothing will change until you see a break above, retest, then we can have the continuation higher, and to the downside it is the same thing, and that need to happen below the monthly S1. Yeah, so keep an eye on the monthly S1 down here, 67.10 as a possible support level as well. Yeah. Aussie Jappy still inside the range, below the daily 200 moving average, going sideways. Now we are somewhere mid-range, and I still think that we need to keep playing this range. Right now in the middle of the range, it's very tricky to trade it. It looks like we may continue lower after making lower low and lower high, so there is a possibility that we move lower toward the bottom of the range. I see the previous high as a possible resistant level. On the daily time frame, you see it clearly here. This high here could be an important supply level, since the price moved very fast from this area, but as you see on the 4-hour time frame, we broke below this range, retest, continuation, breaking below previous low, and now we made a possible double top, broke the neckline, and this could be retest for a possible move lower once again. So keep an eye on this neckline area here, the monthly pivot point. Another thing we could do is take a Fibonacci retracement tool and start watching those levels. As for now, the 38.2 was acted as resistance, the same place where we do have the 200 moving average, and we do have the 618 also at this level. If we go down to the 1-hour time frame, you see that it could happen to be at this structure here. Resistance, resistance, support, and then broken. The only thing that make it a little bit tricky to the downside that we never broke below this low here. That would be much easier to call it a possible continuation, but as you see, it looks heavy, and there is a possibility that we keep making lower lows and lower highs and test those lows where we do have the major support. Okay, as for now, tricky inside the range, in the mid-range, so it's not the easiest one. You could have some short-term scalp on that. Aussie New Zealand also range, we trading inside this box using the 200 moving average and the previous lows as support, but one thing to look at here is the highs are getting lower, and it seems very pressured in the lower area of this box. If we look at the close of these candles, you see that we are pressured to the downside, and that make me feel that this is possible build up for a break to the downside, but it's not easy to call it when we're sitting at such an important support level down here, as you see. Yeah, let me just fix that. So same scenario here, you do have this box to play. The bottom here is our support level. One could expect a bounce higher, but once again, since these highs are getting lower, the first time we've got a bounce here, you see we reach it all the way up, but after this double bottom we couldn't reach the top. After this test we couldn't reach the previous high, and now we couldn't reach even and close above this high. So that's what make me think that it seems pressured to the downside, but of course, before being sure on that, we want to see a break below the range, then we start looking for a possible retest and continuation lower. Otherwise, the bottom of this box is still a support level. Yeah, Aussie USD. Also, you're not in shock to see that we are inside a range on this one as well, where the bottom is the stronger support, because it is an important area where we are trading at right now. Let's go to the weekly time frame. So the weekly time frame, we are below the 200 moving average on the weekly as well, but what's important here is to look at this important swing low here, and these wicks for 1, 2, 3, 4, 5 weeks, all the wicks coming from the downside. So the level being defended very, very well by the bulls, but there was no continuation to the upside. Daily time frame, as you see, the last 20 or 25 days we've been inside this range, and that is what we should be playing. We do have a bullish divergence on the RSI still. We are right now in the mid of that range. The levels to look at is of course back down here as a possible support, and the monthly pivot point is the clear resistant level. Yeah, so keep an eye on those levels. Support is this green area down here, and resistant the monthly pivot point. Aussie USD need to break outside of this box before any momentum move to happen. Yeah, so keep playing this box, guys, until we've got a breakout. There is no trend at the moment. Euro Aussie, same scenario, and another consolidation or ranging market. As I said earlier, typical summer trading. Yeah, still, oh, we do have double boxes. Let's take off this one I do right now and go for the one on the 4 hour we had. It have been very, very easy traded to short the highs and long the lows. This here was a nice fake out below, but it went back all the way inside and keep moving higher. And another touch here, this time we never reached the high. So Wednesday, Thursday, Friday last week, the range was a lower one, as you see, and one could also start arguing that the bulls are not as strong and that we may see a possible break to the downside. That could happen, I'm not sure, but what we know so far, that the 200 moving average on the 4 hour time frame been acting as a good dynamic support after being resistant here. It is acting good as a support level. As you see, we have one here, we have here, we have here, sorry, and we have this test last week. So that is another filter to keep an eye at. Where is my chart? Let's go back to that. So this is another filter to use in your trading. You probably, if you see a break on the 4 hour below the 200, that could be a signal for a continuation lower. But why to start guessing when we already know that this bottom of the box is acting as good support, and we should keep an eye on that as a possible support. As far as it's not broken, this should be your level to look for bullish evidence for at least a retest to these highs, and as a target one, and probably higher if we break previous highs. Otherwise, if what we've been talking about, if this been pressured lower now to some kind of break to the downside, then we need to see price closing below the low of the box here on the 4 hour time frame, and then could be possible to sell the retest. Next trouble area is the monthly pivot point down here. So you need to keep an eye on that level. This need to be broken for more downside. Yeah, that's it for this pair. EuroCAD, we have now broken below the monthly pivot point, broken below the 200 moving average and previous structure, and did reach this important level here. As you see, been acting as good resistance in the past, and we broke also that. Friday was a doji candle, so there was no continuation. For EuroCAD, I think the monthly pivot point and the 200 moving average on the daily, which was up here. Let's take these off. This was a signal in the room after the break below, but we never got the retest, so it was all about selling flags on lower time frame. But on the 4 hour, you see it clearly here. This is the major important structure, and I think it is still the first level to look at to sell it is at the monthly pivot point. Once again, yeah, so to keep an eye on that monthly pivot point and this previous structure here as a possible sell level for EuroCAD. Euro New Zealand also inside the range, and this is the range we're talking about. You see it on the daily, and you're gonna see it even better on the 4 hour time frame. Euro New Zealand as Euro Aussie is now also pressured the last couple of days was pressured near the lows of the box, which could signal a possible pressure to break below here and continues lower. This is what I am thinking may happen here, but you don't sell it near the support. You have to wait for a break below the box, or if you get another bounce, then start looking at this level as a possible sell level, and the top of the box is your highest high. Remember that we're still trading above the daily 200 moving average. We're still trading above the 4-hour 200 moving average as well. So this is actually still could be a consolidation for a continuation higher. We never know. That's why it's much easier to say wait for the break below the box. If we break and close below this important day here, then as you see, there is a possibility that we move lower to test the structure here, or the 200 moving average in this area down here. Yeah, but longer term, guys, and if we go to the weekly, you see we are still inside this major range here. Yeah, this major range, and on the weekly it is easy to see that if we break below this range, there's nothing to hold it until we reach the bottom of this box. EURUSD getting boring and coiling now, making this possible triangle at this important area. Very choppy and sideways, as you see. There is no clear direction. We are just coiling up inside this triangle, and since we are heading toward August, this may continue. The major range is still this area here, as I see this candle as the mother of the range after that. So after this candle happened, this is a controlling candle, and it's gonna be the mother of this whole range. Before talking about any longer term direction for Euro USD, sorry, you need to see a break outside of this range. As for now, we are inside, squeezing inside this triangle, and we should be a bit careful trading this triangle, because we know, or I know, that triangles are a bit tricky, and we do get a lot of fake outs outside of them before the real breakouts happen. So if you really want to trade EURUSD, you want to do it on a lower time frame, and maybe go with pivot points or stuff like that. But as structure, as you see, we do have higher highs, we do have lower highs, we do have higher lows, we do have lower lows as well. So no clear direction. You could use this triangle as a short-term trading, that something like this may happen, a break below, then to sell the retest toward the major support at the S1 and the yearly pivot point, or do the opposite to the upside when we want to see a break above this trend line and then continue toward the R1. In my opinion, the best areas to look at is a retest of R1, possible rejection, or retest of the S1 and the yearly pivot point, and possible rejection to the upside. Those are the best levels to look at for EURUSD. Yeah, not the best chart right now. If you are new to trading, I would say you maybe want to stay outside of this until it make it mind. Sterling Aussie weekly time frame, we've had a nice run to the upside, making higher highs and higher lows. As you see, this was our last higher high, We spent a lot of time at this level, 200 weekly moving average, after closing the Brexit gap down here. And then we've got a nice run lower, making lower lows, and now we have another lower high on the weekly time frame, as you see. And this area down here is the support level around just above the monthly S1 on the weekly, as you see here. Daily time frame, we see that we are playing around the 200 moving average that been acting very good as resistant, support, retested here, another test here, and now we are playing around that. Friday was a very strong candle, bearish candle that closed near the lows, which is signaling that the bears are still in control. We could not break above this structure to maintain possible move to the upside toward these highs. So it seems pressured, and that is possible that we make a retest of these lows, and if that broken, then we'll open the door much lower toward these lows as well. Yeah, so the 200 moving average here been hugged very strongly, and let's go to the 4 hour and see the 4 hour here. We've had also the 200 moving average acting as good dynamic support and resistance. Support here, support here, support here, support here, then broken, retested many times here, 1 2 3 as resistance. And last Friday we broke the trend line, held the lows as well, and there is a possibility that we continue lower toward these areas down here. At least I see the monthly pivot point as a possible level to try a sell. That would be also a retest of the trend line as well. So sell rallies, the only thing that is not so good that we never broke and closed below this low. So you could use this as your filter. You want to see this broken, that would really open the door to the downside if we get a break of this low here. Okay, so that would be our first lower low on the 4 hour time frame. Sterling CAD, easy trade that I did call in my weekly overview last week, guys. I told you that after this break now we look for the retest and the continuation. This seems to be the leading one, since it is the one that already left below the 200 daily moving average and left this range here in continuation. So it's about to end the move now. As you see, we are reaching this previous important low here, a support level that need to hold if really the bulls want to push this higher. They need to defend this one, because we do not have anything below that, as you see, till we reach these areas. So keep an eye on this level, very important support level. If broken, then we gonna move much lower on Sterling CAD. But as I said, very nice trade, been following this in the room. Took a nice trade here on the bearish engulfing on the 4 hour. First I was thinking that we may enter back inside the box and start going higher, but after this bearish engulfing candle here, it was easy to go a lower time frame, take a retest and continuation. Then on the 1 hour we've had this flag that I called out, that we gonna trade to the downside if we break that. We've got that as well. So very nice trade, closed most of the position now, and waiting to see what will happen when we reach these lows down here. Yeah, so keep an eye on this level. Big news for sterling next week. Could be the catalyst for either a bounce from this area to the upside or a continuation lower below that. Of course, as resistance, we're gonna be using this area once again when tested to see if we're gonna get another bounce to the downside. That have to be mentioned. Sterling Jappy also still in a bearish mode after this strong move, a correction higher, and another leg just started. We just broke previous lows from last week. I think now when we're trading below the monthly pivot point, we're trading below the 200 moving average, there is still a possibility that we also reach on this one, this important area at the monthly S1, and previous lows down here may act as possible support for a bounce. Yeah, so may continue lower until Thursday, and until we've got the super Thursday for the sterling. That will be the catalyst, as I said, either for a bounce to the upside or a continuation lower. As for now, since we broke previous low, I think we should keep looking to sell the rallies, and I think any move higher toward the 200 moving average on the 4-hour could be a possible area to sell it from, or at around the monthly pivot point down here. Yeah, don't sell it at this level here. As you see, we're sitting at a possible support, been tested many times on lower time frame, but on the daily the major support are down here around the 143.75. This area at the monthly S1 is the major support in this pair. Sterling USD also bearish on the daily with lower lows and lower highs. We've tested the monthly S1 first time, and that was the day that I sent out trade idea here, I think, about reaching major support. As you see here, when we reach that level, we've got a bounce on the daily, but there was no continuation from the bulls, so it is still looking weak with a lower low. This was our last low here at the monthly S1, and it still is a very important support level. If you follow me here at this one, you see that been tested many times, so it is still an important level, and we should keep an eye on that as a possible support level. Now the trend, do not forget, still to the downside, so it was a very good idea to sell. If you're holding a short at this retest, then very good, since Thursday was a nice bearish engulfing candle, and we may continue to retest these lows around the monthly S1, and that is what where you need to keep an eye at that level, especially if we reach that around Thursday, to see if we're gonna break below and continue lower, or if that would be the support and the level where we get a bounce higher on those news. To the upside, we still see this level here around the 1.32 as a resistant level. Yeah, as far as we are trading below that, we can still be seller at that level, using the 200 moving average on the 4-hour. Been tested nicely as resistance here. We had a break above it, but then went back inside in a very strong way, and as you see, it's been tested nicely as a dynamic resistance. So keep using that as your filter and a possible sell level, yeah, until Thursday, and then things may change. New Zealand USD range, ranging market, and we moved to a upper range right now with after you having this last low here, we are now trading in a slightly higher range, as you see, and that is the trade plan for this pair, is to trade this box and keep selling the highs, buying the lows. Thursday was a nice bearish engulfing candle, but Friday was not the there was no continuation and closed below that to call a possible retest to this level. But in any case, you should keep seeing this box as your range to trade right now. Keep using that as your sell area. If we look at the 200 moving average on this one as well, resistance here, support here, here and it was support here, then we broke it, and last week on Thursday was another retest, yeah. And in confluence with that we had the monthly pivot point, previous structures, so it was an easy trade to call a short on this one here. Keep an eye on this one. It may continue lower to reach the bottom of the box and then give you a bounce, or if we keep moving higher, you should keep an eye on this level to possibly sell it one more time. Nothing will change until we see a break above the box, or in this case, if we got a break below the box, you should not be selling yet, because the last line of defense is at these lows down here, yeah. So for the downside, you need to see a break below these lows down here, which is a very, very important level here. As you see, these are the really last line of defense before open all this area here to the downside. Okay, so let's go back to the daily. You see it much better here. If we break the box, you still have this area as support, yeah. You need to see this broken as well if you really want to trade this area to the downside. USD CAD weekly time frame, you see that we've been inside this bigger channel here, and those of you who've been following me, I've called this area here as a possible sell level. We've got a nice sell here with a very strong bearish engulfing candle on the weekly, but still the most important level in my opinion is down here at this area, yeah. If we go down to the daily time frame, after this double top, break, retest, bearish engulfing, and now we broke this trend line that been going inside this channel as well, broke below previous lows. So we are not making higher highs and higher lows on the daily anymore. We're making lower lows and lower highs, and there is still a possibility for more downside, but we are soon at that 1.300 as a possible support level, yeah. So if you're holding a short, keep that until 1.30. That could be a possible support level for a bounce higher from this level to at least retest the monthly pivot point, or if that broken, then we see that we may open the door toward these areas down here. We're still trading above the 200 daily moving average, so if you use this as our filter to call this still a bullish market, this still a bullish market since it is above. If this is your filter, then it is, but this could be also the start of a deeper correction. In any case, 1.30 is an important support, and if broken, then we may open the door to reach these structures down here. USD JPY, very strong push to the downside below the monthly R2 and monthly R1. Last week was a sideways week. With the wicks coming from the downside. I did call this level as an important support level. As for now, we still have no break below this structure, so the range for USD JPY is this range here. Sell, in my opinion, is still the monthly R1, and this down here is the support, and we will keep playing these levels until we break outside of them. If we break to the downside, then we do have the monthly pivot point as an impossible level, or the monthly S1, which is an even better level to use as a possible support area, yeah. But that need to, if that will happen, gold need to start breaking to the upside. If we break above, then we do have some room to the upside if we break above the range, and that room we start having trouble around the monthly R1 as a first structure of trouble. And of course the last line of defense for the bears would be the 113 even handle number as a possible resistant level. So keep it simple, guys. Play this these ranges until they're broken, and then you have your direction. There is no need to be having and over analyzing thing. Yeah. And as you see, this trend line is still not really broken, and the 200 moving average is below the price. So the monthly pivot point, the 110, is an important level as well, as you see here. And the last chart is the Dow, still in a bullish trend, making higher highs and higher lows. Now last week we broke above this high, but we had another high here which we've tested. I was thinking that we may reach these highs up here before any rejection, but there's still some room to that, as you see. And Friday was a bearish candle, bearish engulfing candle, which is usually a reversal signal. It was also the end of the week. We are closing the end of to the end of the month, so there could be some profit taking at this level. And if that profit taking to continue, we may get a deeper correction next week. Do not forget, we are having the we are in the earnings season now, so anything can happen in these markets. As a important support, I see this monthly R1 area is a very important support level to keep an eye at for a possible bounce higher. Yeah, if we will keep moving lower from this. I don't think we should be buying at these highs. A deeper correction would be the better scenario, and in my opinion, somewhere down here around the monthly R1 was a good level where the price left in a very strong manner. So bulls may be defending their stops here at this area for the Dow. Yeah, that was it, the last market, and we're back to the Dixie, which means this is the end of the session. Thanks a lot for being here, guys. Once again, if you do like this session, do not forget to hit the like button. Thanks a lot, trade safe, and yeah, see you out there, and see you next Sunday. Bye bye.